XLM trading volume just exploded, the hidden price signal no one saw coming. The volume spike nobody was ready for. Let's get straight to it. $152.4 million in trading volume for Stellar in just 24 hours. That's not normal. That's not noise. That's a blaring siren, and the fact that barely anyone's talking about it? That's the biggest tell of all. Because here's the uncomfortable truth. When volume explodes like this and nobody's making noise, it's not retail. It's not hype. It's not another TikTok-driven meme rally. It's smart money, whales, institutions, and insiders moving in the shadows while everyone else is asleep at the wheel. This isn't some fluke. Stellar's average daily volume has hovered between $50 to $90 million for weeks. Then out of nowhere, we see a sudden 70% spike overnight. No major news. No Elon tweet. No Coinbase front-page feature. Just pure volume and a whole lot of silence. That's exactly how accumulation happens. Quietly. Strategically. Without retail noticing. But if you're watching this video right now, you noticed, and that puts you ahead of 99% of the market. Let's talk about what this really means. Trading volume is often dismissed by casual investors, but professionals know better. It's one of the clearest leading indicators we have, especially when it spikes without a corresponding move in price. That's not bullish exuberance. That's positioning. That's whales filling their bags while the chart still looks boring to everyone else. This is textbook stealth accumulation. Because real players don't buy green candles. They create them. First comes silence. Then comes the volume. And only after their bags are full do they let the price run. It's a game, and most retail investors are stuck watching the scoreboard while institutions are busy moving the pieces. Let's zoom in on the price action. XLM barely moved during the surge, hovering just around $0.2725, sideways action that most traders ignore. But here's what most people don't understand. It's that disconnect between price and volume that is the most bullish signal of all. When price doesn't move despite enormous inflows of capital, it means one thing. There's someone on the other side of every buy willing to sell just enough to keep the price flat. That's how whale accumulation works. They soak up supply slowly, methodically, so they don't trigger breakout bots or FOMO. But here's the kicker. They don't do this for fun. They do this before something big happens. It could be the quiet rollout of real-world integrations like Eon. It could be Soroban's smart contract metrics going vertical. It could even be a stablecoin corridor about to light up. Whatever the catalyst is, it doesn't matter. What matters is that the smart money already knows it's coming. And if you're paying attention to the volume, you can ride their coattails before the breakout becomes obvious. So the question isn't, why did the volume spike? The real question is, what's about to happen next? That's why this channel exists. We're not here to chase pumps. We're here to read the signals the market gives us before the crowd catches on. And this volume spike? It's one of the loudest signals we've seen from Stellar in months. So if you're here right now, you're not late, you're early. This is the phase where smart investors start building conviction. Not because of price action, but because of what's hiding beneath it. Smash that subscribe button, because we're about to peel back the layers of this XLM volume surge and show you what the whales already know. Let's dive deeper, because this isn't a story about what just happened. It's a story about what's coming next. Who's really behind this surge? Now this is where it gets real. Because when trading volume explodes, and the price barely flinches, most retail investors shrug it off as nothing. But smart investors? They lean in. They know exactly what this pattern means. Someone is quietly buying big, and they're doing everything they can to avoid setting off alarm bells. Let's call it what it is, stealth accumulation. And the on-chain data confirms it. Over the past several days, there's been a notable rise in wallet activity, specifically in addresses holding between 1 million to 10 million XM. That's not your average retail investor hoping to make a quick flip. That's not bots scalping pennies. These are strategic wallets, often linked to high-net-worth individuals, funds, or early institutional players, accumulating heavily without drawing attention. And it begs the question, what do they know that the rest of the market doesn't? Because if you're seeing millions of dollars in XLM move into fresh wallets while the price is flat, that's not a coincidence. That's a calculated move. A chess game, not checkers. Let's break this down. One major clue? Real-world rails are quietly going live behind the scenes. This isn't just speculation anymore. This is about utility infrastructure actually launching, and that changes the entire game. The MoneyGram integration? It's not just a press release. It's now live. Users in over 180 countries can convert cash to crypto and crypto to cash, directly tied to Stellar's rails. That's not future talk. That's now. And here's the alpha most people are missing. That kind of fiat on-off ramp isn't designed for Deegan traders. It's built for mass market adoption. We're talking remittances, underbanked populations, and seamless access to crypto for people who've never touched a centralized exchange. Now stack on top of that the Eon Group partnership in Malaysia, a retail giant with physical storefronts where soon you'll be able to pay in XLM in real life. That's not Web3 hype. That's real people buying real goods with Stellar-based payments. This is where crypto finally stops being speculative and starts becoming transactional. And guess what? Institutions are watching that like hawks. Because institutions don't care about Reddit trends or Twitter hype. They care about rails, liquidity, and payment flows. They care about who's actually building the infrastructure that moves real money. And right now, Stellar is quietly building exactly that. So when you see large wallets stacking millions of XM while all this is going down, that's not noise. That's signal. A very deliberate signal. Because whales don't wait for headlines, they front-run them. By the time the average investor hears about Eon or the full MoneyGram rollout, these wallets are already deep in profit. The accumulation phase is already done. That's how the game works. So here's the real takeaway. If you're seeing volume rise, large wallets buy, price stay flat, and real-world adoption expand all at once, you're staring at a perfect accumulation blueprint. One that repeats across every major crypto before a breakout. It's happened with Bitcoin. It's happened with ETH. It's happening right now with XLM. This isn't a maybe. It's a mechanical pattern, and the pros know it cold. So the next time someone tells you there's nothing happening with Stellar, just smile. Because while they're sleeping on XM, the smart money is already positioned, quietly, strategically, and ahead of the crowd. And if you're watching this, you're not chasing. You're observing what the big players are actually doing, and that puts you one step ahead. Still with me? Good, because what's coming next could change the entire narrative around Stellar. Hidden price signals in plain sight. Let's zoom in on what the market is missing, because right now, there's a hidden price signal flashing bright, and barely anyone is talking about it. It's called volume to market cap divergence, and if you understand what that means, you're already ahead of 99% of crypto investors. Here's the breakdown. Stellar's market cap is sitting just under $8 billion. Respectable, right? But in the last 24 hours alone, $152.4 million worth of XLM was traded. That gives it a daily volume ratio near 2%. Now, that number might not sound dramatic until you realize how rare that is for a mature Layer 1 chain. For context, most Layer 1s like Avalanche, Cardano, or even Ethereum typically hover around 0.5% to 1% volume to cap ratio during normal trading cycles. When you suddenly see that number double, and yet the price remains flat, that's not random, it's pressure building beneath the surface. It's like a volcano. Quiet on the outside, molten on the inside. That compression phase, where trading activity surges, but price stays calm, is the exact pattern that precedes explosive price action. It's not hype. It's data. A repeatable signature that shows up before major breakout events across every asset class, not just crypto. And here's what makes it even more powerful. Stellar's fundamentals are surging in the background, but the market hasn't caught on yet. Let's talk real mechanics. With Soroban smart contracts now activated on mainnet, Stellar just flipped the switch from being a cross-border payment network to a fully programmable financial layer. That changes the entire use case for XLM. We're not just talking about peer-to-peer payments anymore, we're talking DeFi on Stellar. Native swaps. Tokenized assets. Decentralized lending. Stablecoin liquidity pools. The toolkit is expanding fast, and the smart money is already building. And it doesn't stop there. New stablecoin corridors are opening up: USD, MXN, EURC, and more. These aren't speculative meme tokens. These are regulated, fiat-backed stablecoins being integrated into payment rails that already have real users and institutional partners. So ask yourself this: if the utility is growing, the infrastructure is maturing, and the volume is spiking, yet the price hasn't moved, what's really happening? It's simple. The market hasn't priced it in yet. Not even close. Because retail is still distracted. They're watching ETH gas fees and Bitcoin ETF flows. Meanwhile, Stellar is building beneath the surface, evolving into a faster, leaner, more compliant financial stack, with none of the drama and all of the enterprise-grade capability. That divergence between what Stellar is becoming and how the market is still pricing it is exactly what smart money hunts for. It's the arbitrage of attention. And it's temporary. Because here's the truth: price always lags fundamentals until it doesn't. And when it catches up, it doesn't inch forward, it rockets. So if you're watching Stellar right now, not just the headlines but the on-chain flows, the volume ratios, the ecosystem upgrades, you're not late. You're early. You're seeing the setup that others will only understand in hindsight. And the next time XLM rips 30%, 50%, 100% in a matter of days, most will call it a pump. But you'll know better. You'll know it was signal hiding in plain sight all along. Why this isn't just a blip? Let's cut through the noise. Because if you think this volume spike is just another flash in the pan, you're missing the bigger game being played. This isn't just a blip. This is a shift in behavior, a pivot in posture, and most importantly, a preview of what's coming next. We're not looking at random volatility here. We're looking at measurable, strategic movement, and it's happening across multiple layers of the Stellar ecosystem. Let's start with the macro signs most people are sleeping on. Institutional trading volume is creeping back into Stellar pairs on platforms like Coinbase Pro, Kraken, and Binance. These aren't your average Deegan retail flows. This is clean volume, high-ticket trades moving quietly, efficiently, and consistently. Behind the scenes, OTC desks, the ones that handle large, off-exchange crypto transactions for whales and institutions, are reporting a surge in XLM-related inquiries. That doesn't happen unless someone is trying to stack without slippage. And on-chain? Soroban smart contracts have now surpassed 10,000 deployments. But it's not just devs testing code. Over 40% of those contracts show active, recurring user interaction. That means people are building, and more importantly, they're using what they built. Still think this is a blip? Blips don't come with that kind of back-end activity. This is infrastructure locking in. The foundation is being set, and that's what separates short-term noise from long-term trend reversals. But here's where it gets even crazier. One of the biggest stories flying under the radar right now is Stellar's emerging dominance in global trade finance. Thanks to Palago Labs, Stellar is now powering tokenized invoice finance, real B2B transactions with real-world friction being eliminated in real time. Palago isn't just testing concepts. They're actively tokenizing invoices, automating payment execution, and settling cross-border value transfers with up to 90% less cost and time compared to traditional rails. That's not a DeFi play. That's enterprise-grade disruption. And guess what industry they're targeting? Global B2B payments. A space worth over $10 trillion annually. That's not just big, that's global financial plumbing. And Stellar is sliding into that system, piece by piece, without the hype but with all the precision. Think about that. This volume spike? This market activity? It's not retail chasing green candles. It's a reflection of a deeper narrative shift. Because Stellar is no longer just the network that people used to call Ripple's quieter cousin. It's not just the payment token your uncle bought in 2018. Stellar is becoming the invisible layer powering actual financial infrastructure, and no one's ready for how fast that evolution is accelerating. Let's call it what it is, a repositioning of XLM in the crypto hierarchy. It's moving out of the shadow of narrative-driven speculation and into the spotlight of functional, integrated, enterprise-ready infrastructure. So when you see trading volume erupting, wallets accumulating, smart contract deployment scaling, and real-world use cases gaining traction, you don't dismiss that as a blip. You recognize it as the early tremor before the quake. This isn't temporary. This is the moment before the market narrative catches up to the fundamentals, and once it does, the repricing will be violent. So don't get caught chasing it later. Pay attention now, because what looks like just a volume spike today might be the origin point of Stellar's reawakening. What happens next, and why you can't ignore it? Let's be clear, this isn't just a spike in activity. It's a coordinated setup unfolding right under everyone's nose. Stellar just dropped a $152 million daily trading volume candle. That alone should have made headlines. But it didn't. Because the price barely moved. No wild breakout. No major headlines. No tweet storm driving hype. And that's exactly why it matters. This kind of setup? It doesn't happen often. But when it does, it almost always signals the same thing. Silent accumulation by players who know what's coming. Let's break it down. The volume is telling us that capital is flowing in. The flat price tells us that it's not retail-driven, because retail moves the chart with emotion. But when volume surges and price doesn't, that's stealth mode. That's smart money loading up before the catalyst hits. And make no mistake, the catalysts are already lining up. We're on the edge of global deployment for MoneyGram's Stellar-based ramps, making it possible to move cash to crypto and back in 180 countries. That's not just on-chain utility. That's global liquidity integration. We're about to see XLM accepted in physical stores across Malaysia through the Eon partnership, bringing real-world retail volume into the mix. And let's not forget what Soroban is unlocking. We're not talking about half-baked DeFi experiments. We're talking enterprise-grade smart contracts running programmable payments, on-chain compliance, tokenized assets, and decentralized trade finance, all built natively on Stellar. So what happens next? The very thing smart money is anticipating: price discovery. Once those real-world flows start showing up in transaction data, once DeFi metrics on Soroban start rivaling the early days of Ethereum, once corporate partnerships like Palago Labs start scaling, and they will, the broader market won't be able to ignore it anymore. That's when the volume will stop being hidden. That's when it becomes headline news. But by then, the opportunity will have already shifted. Because the accumulation phase doesn't last forever. Once smart money finishes loading, the narrative changes. The media coverage shifts. The influencers catch on. And retail floods in, buying into the momentum that institutional players quietly created weeks before. That's how every major breakout starts, not with hype, but with silence, followed by volume, then followed by narrative ignition. You're not late. Not yet. But if you're watching this and thinking you have all the time in the world, let me be blunt. That window is closing. The pieces are in place. The infrastructure is built. The market just hasn't priced it in yet. And when it finally does, the re-rating of XLM won't be gradual. It'll be violent. So you can either wait until the headlines catch up, or you can pay attention to the signals before they become obvious. This isn't noise. This is positioning. And if you're still here, you're not just early. You're in the silent part of the story that smart money loves the most. Before we wrap, if you found this valuable, hit that subscribe button. Be Crypto Smart is where we track the signals before the rest of the market catches on. And this XLM move? It's just the beginning. If you've been sleeping on Stellar, it's time to wake up and pay attention. Look, the market moves fast. But one thing that never lies? Volume. When you see a surge like this in XLM, with barely a whisper from mainstream media, you know it's not just a random blip, it's a signal. And yes, while the price may be lagging right now, history shows us this. Price always catches up. And when it does, it's the ones who recognize the signs early that reap the rewards. This is no coincidence. This surge in trading activity is the hidden price signal that savvy investors are tracking, even if the rest of the market remains oblivious. It's a flashing light that screams accumulation, while everyone else is too distracted with the next meme coin or hype cycle. So here's the bottom line. Don't miss out on what's coming next. If you're here, you're ahead of 99% of the market. But the window to capitalize on these signals won't stay open forever. The opportunity to get in before the mainstream catches on? That's the sweet spot. The smart money is already positioning, and soon, they won't be quiet about it anymore. If you want in on these deep dives and the kind of analysis that uncovers what's happening under the radar, right before the headlines break, hit that subscribe button now. Don't just watch the market. Learn to read it. Drop a like if you're ready to ride this next wave with us. We're here for the long game, where the real gains are made. This is Be Crypto Smart, where we spot the signals before they hit the headlines.